Coming up on Retirement Today with April Roberts.
Your income gap in retirement is one of the most important numbers that you need to know. This is how we solve for retirement income, right?
Would I need to plan for my taxes perhaps going up?
That's a great question, Mark, and I would say yes. Other than the Great Depression, we're at the lowest tax brackets in the history of our country.
Tax inefficiency, like I said earlier, creates a beneficiary called the IRS, right? Because you're giving money to them rather than your family. But the major part of owning a mutual fund is what people understand, you own part of that mutual fund. You don't own the stocks they bought in the mutual fund, or you don't own a share of them, you just own a share of the pie.
And now the host of Retirement Today, April Roberts.
Hello, and thanks for joining us today. Don't go anywhere because Retirement Today starts right here, right now. Today, we're going to talk about retirement income, everyone's favorite topic. And especially, I want you to focus on minding the gap. I don't know how many of you have been to London, but it's one of my favorite cities. And I love when I go down to get on the tube and that voice comes over that says, mind the gap. I won't even try to give you my best British accent, but it's one of my favorite sayings, and I like my clients to keep it in mind because your income gap in retirement is one of the most important numbers that you need to know. This is how we solve for retirement income, right? So let's talk about how you get your retirement income gap. Let's take a hypothetical couple, and the first one has Social Security of $2,500 a month, okay? The second member of the couple gets $1,500 a month. So that's about $4,000 a month the household has coming in. And then he has an older pension that pays him just a little bit, $500 a month. So their monthly retirement income is $4,500. Now, half of you are thinking, sounds pretty good. The other half are thinking, I couldn't live off that. This couple here cannot live off $4,500 a month to live in retirement the way they want. In fact, they want $7,000 a month. So the math's really simple, right? If we take $7,000, which is the desired income per month, minus $4,500, their income coming in, we'll see that this couple has an income gap of $2,500 a month. Now, if we take that $2,500 times 12, we'll see that they need an additional $30,000 a year of income to live the way they want in retirement. Well, how do we do this? Remember, I always tell you I want to challenge your thinking, right? Retirement income are standard sources of income. So things like Social Security and pension, items that we know won't change. The rest of your money, think about it like retirement savings. So we have this retirement savings bucket over here made of your 401ks, your savings, anything else you've set aside to help get you through retirement. My job as a retirement income planner is to take some of those retirement savings, turn them into guaranteed income streams, and solve for this gap. So how many of you are thinking, I bet she could do that, or I bet she couldn't do that, right? The next answer is, it depends. Of course, I sound like a lawyer, don't I? It depends because we don't know the full story. We could have two households with the same income gap. Imagine that. But one of the households has $1 million in their retirement savings bucket. So 30,000 divided by $1 million is 3%. That family's sleep number is 3%. It means I have to go to their retirement income savings and change 3% of it into retirement income, right? Another family might have saved $500,000 for retirement. Well, this family needs 6%. At the end of the day, do you think our plan's going to look the same for the family that needs 6% versus 3%? Absolutely not. But this number is critical. Again, I call this your sleep number, and I'm not talking about mattresses. I'm talking about the withdrawal percentage we need to take from your retirement savings to supplement your retirement income so that you can sleep at night. So if you have any questions about this, feel free to visit our website or give us a call at the office.
You're watching Retirement Today with April Roberts, because you deserve better.
It's your retirement. How will you live it? How will you be remembered?
Will you be able to take me on vacation?
Will you be there for my ball games?
Will you teach me your values? You'll be able to play with me. Oh, help me go to college.
How will I remember you?
Have the retirement you dream about. AskAprilRoberts.com.
Having no clear retirement plan is a mistake I see a lot in my financial planning office when I meet with someone new. It is extremely rare that someone comes in and has a clearly defined income plan for his or her retirement. One way you will be able to get a clearly defined retirement income plan is to talk to an independent financial advisor who specializes in retirement planning. Not someone who is specialized in getting you to retirement, but someone who is dedicated to getting you through retirement. If you don't have a clear retirement plan, then be one of the first 5 callers and you will receive a free complete planning review. There is no obligation and no cost if you have at least $250,000 saved for retirement. Here's what you will receive: a free report to sort through your current advisor's cost, a tailored plan to guard your investments, tax analysis to reduce liability and increase cash flow, and a custom income plan to boost retirement. Plus, you'll receive a budget assessment to help manage your cash flow. So call now for your free, no obligation financial review.
You're watching Retirement Today with April Roberts, because you deserve better. Hi, and welcome to this week's Retirement True or False, where I'm accompanied, of course, by Paul and April Roberts. And April, my first question is for you. Banks are not the best place to keep your money safe. True or false?
Boy, Mark, you wanted to start with a tricky one for me, didn't you? This is kind of true. So banks are one place that's considered safe from market risk, right? And there are actually 3 places you can put your money so that you keep it safe from market risk. Number 1 is a bank. Number 2 are U.S. Treasuries. And the 3rd place are life insurance companies.
All right, Paula, my next question is for you. And that is, are you ready?
Ready.
Taxes will go up in the future. True or false?
That's a loaded question. I think it's true based on the facts I have before me at this time. As we like to say, the facts on the table say. But I feel strongly they will have to go up. And I think they will eventually adjust those and they'll even out to be something reasonable.
Well, and April, let me follow that up with you. Are taxes right now at historic lows? I guess if I was to say in the future, and I'm planning my retirement, would I need a plan for my taxes perhaps going up?
That's a great question, Mark, and I would say yes. Other than the Great Depression, we're at the lowest tax brackets in the history of our country. So lots of people are saying that taxes are on sale right now, even though most of us feel the pain when we have to pay them. So historically, you're correct. Taxes have been much higher and will probably cycle back into a much higher tax bracket, I believe.
All right, April, my next question is for you, and that is, most retirees and pre-retirees have not planned for their potential health-related expenses in retirement. True or false?
True. So, Mark, interestingly, what's increasingly a concern of retirees, because we're seeing more and more people retire before age 65, so it is on their radar to plan for short-term medical expenses. They want to figure out how to pay for health insurance until they turn age 65 and go on Medicare. What they're not thinking about is the long run. Down the road, when they have larger issues, maybe they need to go into an assisted living facility or even a long-term care facility, or if they need nursing care at home. So a lot of times people just don't want to think about this, and the truth is 1 out of every 2 people will be affected by these costs.
And Paul, I don't know if you know this right at the top of your head, but roughly how much per individual in retirement will they have to pay out of pocket medical expenses, or as a couple?
How much?
Well, would it be hundreds of
Lifetime?
thousands in
Oh,
retirement?
it'd be at least $250,000. Could be $1 million. That's the unknown. That's the financial plan part that you have to have some coverage for because it is so unknown, you know.
But it is perhaps maybe for most, much larger than they would anticipate out of pocket.
It's always that way.
Paul, my next question is for you. Mutual funds are not an important part of an investor's portfolio once they've retired. True or false?
I believe that's true the way I practice because we think by the way, let me qualify that. Mutual funds have been good tools for people in their 401ks to accumulate money up to the distribution stage. But after that, they're very tax inefficient, and it's better and leaner and meaner and cheaper to invest with some other instruments other than mutual funds.
Paul, April, thanks so much. Don't go anywhere. We got a lot of great stuff to come. You're watching Retirement Today with April Roberts, because you deserve better.
Remember when life was simpler? When things didn't move quite so fast, and the world didn't seem so complex? Remember that? We do. And as the world around us has continued to speed up, becoming more complicated, and still a bit uncertain, we have managed to keep things simple, providing sound, easy-to-understand financial advice and customized roadmaps for the road ahead, from tax reduction strategies, investment advice, and guaranteed retirement income you cannot outlive, backed by the claims-paying ability of insurance companies. We can be your single point of contact, a single call, a voice you recognize well, and a partner who can be by your side for the entire journey. We can't stop the world around us, but we can help ensure you're prepared for what's to come. To schedule a no-obligation meeting, simply contact us today.
Having no clear retirement plan is a mistake I see a lot in my financial planning office when I meet with someone new. It is extremely rare that someone comes in and has a clearly defined income plan for his or her retirement. One way you will be able to get a clearly defined retirement income plan is to talk to an independent financial advisor who specializes in retirement planning. Not someone who is specialized in getting you to retirement, but someone who is dedicated to getting you through retirement. If you don't have a clear retirement plan, then be one of the first 5 callers and you will receive a free complete planning review. There is no obligation and no cost if you have at least $250,000 saved for retirement. Here's what you will receive: a free report to sort through your current advisor's cost, a tailored plan to guard your investments, tax analysis to reduce liability and increase cash flow, and a custom income plan to boost retirement. Plus, you'll receive a budget assessment to help manage your cash flow. So call now for your free, no-obligation financial review.
You're watching Retirement Today with April Roberts, because you deserve better.
My tip of the week is that when you're retired, we want to make sure that you don't lose too much money unnecessarily. I like to share with my clients that we answer 2 questions well. Number 1, how much risk can I afford to take? That's what we have to answer for you. And number 2, how much risk do I want to take? That's your gut reaction. And when I ask that question, I want to know from my clients, at what point are you going to start losing sleep at night? Now, I share with my clients that we like to build their retirement income home. That's made up of the foundation. If you know your foundation's going nowhere in your home, am I right? So our foundation we don't have to worry about. It keeps on ticking and keeps on working for us. The walls of your house are your lower risk investments, and the roof of your house are your higher risk investments. So where can we potentially lose money? In the walls and the roof, right? Now, here's a little known fact that most people don't know. In the financial world, if you're a money manager and you're correct 60% of the time, you're a rock star. Well, let me ask you this question. Would you like a 60% chance that your retirement income plan is going to succeed? I don't think so. We want to make that higher, don't we? In fact, we want a plan that cannot fail. And so our foundation is in place. It can't fail for us, but we have our walls and our roof. How do we protect that? Well, I ask my clients, imagine that you were going to the park with your grandkids, right? And you had to put a seat belt on only one of them. Which grandchild are you going to choose? You're not. You're going to put a seatbelt on both the grandkids. Am I correct? So we can't have a seatbelt on our foundation and not one on our walls and our roof. How we protect all of your assets at Roberts Wealth Management is on the walls and the roof. We've partnered with a phenomenal company, Asset Lock, to put a safety net or a seatbelt on these assets. Because if the best money managers in the world are only right 60% of the time, we need to insure against that other 40% of the time. A lot of people come in and tell me, my financial advisor is great, he's got this. But what if he or she is wrong? What if I'm wrong? What if our money manager is wrong? You can't take that risk in your retirement income plan. So if you'd like to find out more information about how to put a safety net or a seatbelt on your retirement savings, give us a call or visit our website. And that's my tip of the week.
You're watching Retirement Today with April Roberts, because you deserve better.
You made it. Years of hard work, investing, planning, and now you're here. The long-awaited reward you spent a lifetime looking forward to. But what now? After years of growing a nest egg, now you may want to manage it. Use it to fund your dreams. Make it last as long as you need it. And leave some for those you love. So what do? Wall Street continues to be uncertain, and some conservative options have dropped through the floor. How do you maintain opportunities for growth and reduce risk of loss from market changes? That's where we come in. We are financial professionals. From investments and insurance products to tax reduction strategies and guaranteed retirement income you cannot outlive, provided by the claims-paying ability of insurance companies. You've worked a lifetime to get here. Let us help you enjoy it to the fullest. For a complimentary consultation, simply contact us today.
You're watching Retirement Today with April Roberts, because you deserve better. Hi, and welcome to Retirement Roundtable, where I'm accompanied, of course, by Paul Roberts and April Roberts. And we're talking about, you guys have had this document for quite some time to send out to people, and I know that you've updated it recently. And it's a great close-up look at the mutual fund industry. It's called 8 Things You May Not Know About Mutual Funds: The Good, the Bad, and the Fine Print. We're going to talk about this today. And April, I'm going to start it with you. And number one on here, this is a biggie. Expenses can be much higher than you think.
Yeah, Mark, it surprises me how many people come into our office and we offer a risk and fee analysis for their second meeting. You know, we take their statements, all of their holdings, and then come back with a report to them. And people are absolutely shocked. They know there are expenses in their mutual fund, but they have no idea just how much. And I like to say it's kind of like an iceberg, right? There's a little part of the iceberg that you see, and there's a lot of it under the water. With mutual funds, that's what's called stated and unstated costs. Most people don't realize that the expense ratio you see are only made up of stated costs, which is what they're required to disclose to you. But there's all this stuff under the water that they're not required to disclose to you. So there's, some talk of changing this, but that's how the industry currently is. And this is why most people don't realize exactly what they're paying for their mutual funds.
Because everybody reads that big, thick prospectus, right? Everybody reads that when you take it out of the mailbox, okay? Personally, what I like to do is keep it on my nightstand, because when I'm feeling like I can't sleep, I go through about 2 or 3 pages of that and I'm good to go. Paul, my next one is for you, and that is mutual funds can be tax inefficient. Let's talk about that.
Yeah, that's really close to my heart, being an old CPA, because tax inefficiency, like I said earlier, creates a beneficiary called the IRS, right? Because you're giving money to them rather than your family. But the major part of owning a mutual fund is what people don't understand. You own part of that mutual fund. You don't own the stocks they bought in the mutual fund, or you don't own a share of them. You just own a share of the pie. In there is all the stocks, okay? They control when to buy and sell them or when to create gains and losses for you, not you. And so you're not really in control. People don't like losing control, okay? The other thing is during the day, mutual funds close as a close of market business, whatever the value is. You can't have intraday kind of trading, which you don't want to do a lot of anyway, but it could be important if you're on a slide and you want to escape, right? You can't escape to 4 o'clock, right? The biggest thing I find though is that most people know nothing about is a thing called phantom income, where you own a mutual fund. Let's say an individual takes $100,000, puts it in mutual fund A, and mutual fund A owns Apple stock, have had on the position for quite a while and have a profit in that stock, although maybe the mutual fund's not doing so great. They sell that stock, they have to send a 1099 capital gain dividends to everybody who owns a mutual fund at that time. You might not even been in there when they bought Apple stock. But here's what happens. So then the market dives, they sell the Apple stock, your 100,000 is worth 80, and yet you get a 1099 at the end of the year for $10,000 capital gain because they made that much profit on the Apple stock. So here you are, a person sitting here like, how did this happen to me? I'm paying tax on $10,000 and I've lost $20,000.
Amazing.
It's called phantom income.
In April, the number 3 here is mutual fund performance mixed results, because I was reading an article one time that said that less than half of mutual funds out there are actually outperforming the index they were designed to beat.
Actually, Vanguard did that study, and it was 83% of mutual funds that did not outperform the index. And of course, part of that has to do with what we talked about, the increased cost of owning mutual funds, right? Number one. Number two, the tax inefficiency that Dad talked about. And number three, the problem is we have a lot less mutual funds, Mark. They've been merging, some have disappeared, and what also has happened is there are less public companies out there than there used to be. So a lot of these mutual funds own the same investments. So one, not only are you getting mixed results, but two, if you own a portfolio of mutual funds, it's likely that you own Apple stock 10 times in that portfolio. So it's very important that you have a more succinct strategy for investing that's not so inefficient. And imagine that's if one person had you in a bunch of mutual funds. What if you're at multiple brokerage houses with different portfolios of mutual funds, and you have your 401k that you have mutual funds in? You have no one looking overall. I bet you that Apple stock might be owned more than 10 times in that scenario.
And I wonder too, because we've talked about this in previous shows, that there is actually a time and a place for them, though maybe not later in your career, correct?
Correct. Well, what I like to share with my clients, because when they come to us, they're pretty successful. I mean, they're retiring, and they wouldn't be there if they hadn't accumulated and saved assets. So when you're in your 401k, you don't have a lot of options. You have mutual funds or company stock for the most part, right? So you're kind of forced to invest in mutual funds. And when you're younger, it was a great way with a small amount of money to own a bunch of companies, right? But as you get older and you're more successful, there are much more sophisticated means of investing that are at your fingertips.
April, Paul? Yes, Paul.
I was going to jump in there a minute and say one of the things we do in second or third meeting is we do an X-ray of people's mutual funds, and that X-ray will tell you where you have that stock ownership crossover, we call it, and that'll be involved, and they'll be informed for the first time in their life.
Yep.
Awesome. All right, you definitely want to pick up this brochure. It is Mutual Funds, the Good, the Bad, and the Fine Print. Stick around. We'll be right back. You're watching Retirement Today with April Roberts, because you deserve better.
You're on the back nine heading for the clubhouse. Your dreams of spending time with family and enjoying retirement are just within reach. What happens if you end up in the rough? In these uncertain times, it's crucial to be prepared with sound advice. Roberts Wealth Management is one of the premier retirement income planning firms in Texas. For a complimentary consultation, call 713-322-6600. Roberts Wealth Management, helping you create a winning strategy.
Having no clear retirement plan is a mistake I see a lot in my financial planning office when I meet with someone new. It is extremely rare that someone comes in and has a clearly defined income plan for his or her retirement. One way you will be able to get a clearly defined retirement income plan is to talk to an independent financial advisor who specializes in retirement planning. Not someone who is specialized in getting you to retirement, but someone who is dedicated to getting you through retirement. If you don't have a clear retirement plan, then be one of the first 5 callers and you will receive a free complete planning review. There is no obligation and no cost if you have at least $250,000 saved for retirement. Here's what you will receive: a free report to sort through your current advisor's cost, a tailored plan to guard your investments, tax analysis to reduce liability and increase cash flow, and a custom income plan to boost retirement. Plus, you'll receive a budget assessment to help manage your cash flow. So call now for your free, no obligation financial review.
You're watching Retirement Today with April Roberts, because you deserve better.
Thanks for watching the show today. If you have any questions, feel free to visit our website or give us a call at the office. And remember, a sound retirement income plan is your start to a happy and smart retirement.
It's your retirement. How will you live it? How will you be remembered?
Will you be able to take me on vacation?
Will you be there for my ball games?
Will you teach me your values? You'll be able to play with me. Oh, help me go to college.
How will I remember you?
Have the retirement you dream about. AskAprilRoberts.com.
Having no clear retirement plan is a mistake I see a lot in my financial planning office when I meet with someone new. It is extremely rare that someone comes in and has a clearly defined income plan for his or her retirement. One way you will be able to get a clearly defined retirement income plan is to talk to an independent financial advisor who specializes in retirement planning. Not someone who is specialized in getting you to retirement, but someone who is dedicated to getting you through retirement. If you don't have a clear retirement plan, then be one of the first 5 callers and you will receive a free complete planning review. There is no obligation and no cost if you have at least $250,000 saved for retirement. Here's what you will receive: a free report to sort through your current advisor's cost, a tailored plan to guard your investments, tax analysis to reduce liability and increase cash flow, and a custom income plan to boost retirement. Plus, you'll receive a budget assessment to help manage your cash flow. So call now for your free, no obligation financial review.